Oh, we are live. All right. Hello, Facebook friends. Sorry, we had little technical difficulties there trying to get ourselves live, but we are live. And welcome to part 2 of our 3-part series on home loans and the home loan process. If you missed part 1, you just need to scroll down my feed a little bit and you can see it from last week. But I'm also working on a YouTube channel right now, so hopefully by next week I'll have that up and running, and then you'll be able to watch all the videos at once, all 3 parts to this to the series. But last week we talked about the beginning stages of the loan process. We talked about pre-approval, applying for a loan, what to look for in a lender, and today we're going to dive a little bit deeper into different types of loans. And if you have any questions, please feel free to type them into the feed on Instagram or on Facebook, and we're going to answer everything at the end. And even after we're done, if you want to ask questions, we can definitely answer them later as well. I'm joined here today by my friend, Ryan Salem. We went to College of Charleston together, go Cougars. Wow. And Ryan is a mortgage specialist here in Jacksonville, Florida with TrustLine Mortgage. And thanks for joining me today, Ryan.
Oh, thank you for having me back.
So there's many different types of loans, and it's really important to find the one that works right for you because they all have pros and cons and different things that are good about them. Today we're going to talk about some of the most common ones. So the conventional, FHA, VA, and we're even going to touch on renovation loans a little bit. So first, let's talk about FHA a little bit. Many people think that this is just a first-time home buyer loan. Can you explain really what the FHA loan is, and is that true?
Sure. So an FHA loan, you do not have to be a first-time home buyer to qualify for an FHA loan. FHA requires a minimum of 3.5% down payment, and you do have mortgage insurance with that. But it kind of, I guess, typically got that original stigma as a first-time home buyer loan. Because some of the guidelines on certain items are a little more relaxed, allowing first-time home buyers to qualify a little bit more easier. For example, the debt-to-income ratio typically allows you to go a little bit higher so that you can qualify for a little bit more.
Okay, all right, that makes sense. But I've heard that a lot of condos, we have a lot of condos here in Jacksonville, right, won't accept FHA loans. Why is that?
Well, it's actually the opposite. It's more that FHA won't accept the condo.
Oh, okay.
So financing condos in Florida is a little bit more difficult because not only do we have to underwrite the borrower, but because there's a homeowners association involved, we have to get some information from them to make sure that they're in good standing and have to underwrite them as well.
Okay.
So FHA is a little bit more strict on that in that they require the condo association already be on their approved list that they have. And we've just found that there are not many condo associations that go through the process of applying and getting approved with FHA so that you can finance one of their condos through FHA.
There's a list out there. So do you have that list?
There is. There is a website that you can go to. And they keep a running list, and it'll actually show you ones that had expired as well. So if maybe a particular association used to be approved but is no longer, it'll show you that, and it'll show you the reasons why it expired or why it got declined. But yes, there is a list.
Okay. Yeah. So kind of talking about the first-time home buying thing again. So just making sure that everyone's clear. If I bought a house 4 years ago, and let's just say I sold it last week, and now I want to buy another house, I can use the FHA loan again, right?
Absolutely.
Okay. All right. So that's really good to know. Okay. Now tell me a little bit about the conventional loan, just some of the basic things about conventional loans.
Sure. So a conventional loan is typically the loan that you think of, just because it's been around the longest. But conventional, it only requires a 3% down payment, which is nice.
So less than FHA.
Actually, it's a little bit less than FHA.
Okay.
And one nice thing, and this is actually for FHA and conventional, that whole 3% can be a gift. So if you have a relative who's willing to give you some money for the down payment or the closing costs, we can accept a gift for that.
Man, I want someone to give me a gift for my down payment. That would be nice.
Yeah.
Okay, so it used to be 20% down there for conventional. Is that 1 point, or is that, am I right? I feel like some people think 20% down for conventional.
Right. A long time ago, you used to have to put 20%. That's not the case anymore.
Okay.
Like I said, the minimum down payment is 3%. The key, though, is if you do not put a full 20% down, you do have what's called private mortgage insurance.
Oh, PMI. Okay, so let's talk about PMI, because I use that word a lot with my buyers, and they're like, what is PMI? So yeah, let's talk a little bit about what PMI is.
Right, so PMI stands for private mortgage insurance.
Okay.
And that is required if you do not put a full 20% down on an FHA loan. The cost of it really varies depending on how much you're putting down in your credit score. But the nice thing about PMI on a conventional loan is it'll eventually drop off. So once you pay that balance down to about 80% of the original loan to value, you can request that PMI drop off of the loan.
Okay. Yeah. So that'll save you some money on your monthly payments then.
Absolutely. Okay. Absolutely. And really, the nice thing as well is you have a couple of different options to pay that private mortgage insurance on a conventional loan. So you can either pay it monthly, just a little bit each month with your monthly payment. If you have a little bit of extra cash, you can pay the premium all up front. That way you don't have the monthly payment. Okay. Or we can do what's called lender-paid mortgage insurance, where you have a slightly higher interest rate, but you don't have that monthly mortgage insurance premium. So it's really just a matter of taking a look at all options and seeing what suits your financial needs the best.
And you walk through your buyers all those different options, right? So I know everything that's laid out for you.
Absolutely. I'll give all that to you. That way you can decide what will work best for you.
So if you can put as little as 3% down on a conventional loan, why would someone go with an FHA over a conventional or vice versa?
Right. Yeah, that really just depends on your particular financial situation. There's pros and cons to each loan, but a good example is, let's say, for example, you had a foreclosure a couple of years ago. Well, conventional requires that you wait 7 years from that foreclosure date in order to be able to qualify for a new loan.
7 years, that's a long time.
A long time, absolutely.
Yeah.
Where FHA, they only require you wait 3 years.
Okay.
Yeah.
Okay. Well, that's good to know. Definitely good information there. So another loan we want to talk about today is the VA loan. We live in an area where we do have a lot of veterans, and if I have any veterans that are watching this right now, thank you so much for your service, and please take advantage of this VA loan because it's great. But Brian, tell us a little bit about the VA loan and what they need to know.
Right. But the VA loan, in my opinion, is one of the best deals on the market. So as long as you have your eligibility, the VA allows for 100% financing, so no down payment, and there's no mortgage insurance.
No PMI.
No PMI. So
man, that's nice.
That's the great thing. You 100% financing and no mortgage insurance.
Wow. So I've heard that you can't do more than one VA loan at once, though. Like, can you have more than one if you have 2 houses?
You actually can have 2 VA loans at the same time. Each veteran is given a certain amount of entitlement, as the VA calls it. And as long as you haven't used up all of that entitlement on one property, you can use the remaining on another property. Okay. So let's say, for example, you own a house, you have a VA loan on it, and you're looking to move into a new, bigger house. Mm-hmm. But you maybe aren't able to sell your current house right away, or maybe you want to eventually turn it into a rental property. Mm-hmm. Well, as long as that's the case and you still have some entitlement left, you can purchase that new home with a VA loan, and it would still keep your old VA loan.
That's a good deal.
Yeah. But you can only have one primary home with a VA loan on it. Yeah. Has to be your primary home.
So the price point of the VA loan, is there a cap at any point?
No, there's really not. We can do jumbo VA loans, which means anything above a loan amount of $453,100.
That's pretty high.
It is, yeah. Mm-hmm. And when you do get above that limit, you do have to put a little bit of a down payment on a jumbo VA loan, but there is no limit.
Okay. All right. Great information. If you guys have any questions on the VA loans, please give us a holler, let us know. So the last one we're going to talk about today is the renovation loan, and we all love to watch Chip and Joanna on fixer upper. I am guilty. I watch it too, and I see the shiplap and I see the subway tile, and it all looks so pretty. Well, the good news is you can do a renovation loan where you can get something like this. Obviously, Chip and Joanne aren't going to come do it for you. And there's a lot of great deals still out there on the market of homes that just need work done to them to make them what you want. So, Ryan, tell me a little bit about how the renovation loan works.
Yeah, this is a great program whether you're purchasing or looking to do some renovations on your current home. So the key with the renovation loan is going to be the appraised value. So before we can order the appraisal, we have to get the detailed plans and specifications as to what renovations or repairs you're going to do. That way we can give that information to the appraiser, and they can base their value off of those repairs and renovations being completed.
Okay.
So the house is going to have to appraise for not only just the sales price, but also enough to include the cost of the renovations.
Okay. You guys can review that pretty thoroughly too. Once they have to pick a contract and what they want to do, that just probably takes a little bit of time to get reviewed.
Absolutely. It does take a little bit of time. Typically with a renovation loan, we can still close in 30 days or so.
Oh, wow.
So the
That's
way,
good.
yeah. The way it would work is, as long as, like I said, the appraised value comes in fine, we would then close, and then that's when your contractor can start the work and begin the process of the renovations.
Okay.
We'll start issuing the draws so they have the money that they need to get
And
this
that all goes through the loan, right?
Yeah, it's all done through the loan.
Okay,
Yep.
so it's not like the buyer has all the cash to give out themselves, so the lender takes care of doing all
Right.
that.
It works
Okay.
very much like a construction of perm loan.
Okay.
Yep.
All right, and I actually worked with someone last year to do one of these, and they bought a super cute house in Atlantic Beach, and it just needed a lot of work, and it does take a while. So I'm just going to tell you, if it's something you want to do and you're in a rush to find a new home, may not be the best option, because I think we closed in May, and then she finally got to move in November. So it takes some time, and especially with Hurricane Irma just coming through, roofers are really backed up right now. So if a house needs a new roof, you need to allow some of that time as well. But that pretty much wraps up the loans that we're going to cover today. So I'm just going to pull this over here and see if we have any questions that came in. I don't know if we did or not. Let's see. I'm not seeing any questions right here. You want to scroll up there and see if we have anything?
Let's see.
I know last week we did. I felt bad we didn't answer them until later. I'm not seeing anything right now, but if you guys have any questions, we're going to keep an eye on this feed for the next couple days. So please feel free to ask questions in here, or you can message either of us from Facebook, or reach out to me if you want Ryan's contact info. And thank you guys for joining. We have one more part to this 3-part series, and we'll be doing that next week. And we're going to talk about closing costs, which is a really big factor for people, and appraisals, which we started talking about appraisals today, but we're going to dive more into appraisals and closing costs. So I'm Amanda Creech with Berkshire Hathaway Home Services Florida Network Realty. I like to say closing deals and heels. And this is Ryan with TrustLine Mortgage. And thank you so much for joining us, and have a great evening.
Thank you all.